Also, this is a bit of exclusive content that I shared with the masterminds today, because you may have been hearing that hash rate is climbing through the roof. So it's going parabolic. Now, hash rate is the computing power hitting the network, and it is screaming high. Now, normally you'd think this is a good thing, because historically, price has lagged hash rate. So price eventually catches up to the hash rate. It gives you an idea of the health and security of the network. It makes the network just that much harder to attack. The 51% dreaded attack, which now becomes, I don't want to say impossible, but it needs to happen on an almost sovereign level. You have multiple countries with huge amounts of ASIC miners, and then again, I won't get into the weeds, but we're seeing that fall go much higher. But why I want to point this out is because this might actually be a bit bearish in the short to mid-term. So if the macro doesn't push us lower, and if $19,000 hold, what could actually push us lower? And I think this could, if it plays out to the negative. Now, we're seeing global energy prices surging, and the price of Bitcoin is obviously at 19,000. That is a really low point in this market. A lot of these miners would have got into the market a lot higher, so suddenly their profitability is a lot lower. You add to that as well that the Bitcoin difficulty is screaming higher as well. So it's getting harder to mine Bitcoin, the price is lower. A lot of these miners will be in maybe a bit of financial stress. Now, we had a massive purge in June, which got rid of a lot of the inefficient miners, but right now, these industrial size miners, if they start having issues, what are they going to do? They're going to start selling Bitcoin or start selling what they have, or shutting off their machines to try and keep their heads above water and just weather this little storm before we go higher. So I find that really interesting, that they could dump some Bitcoin on the market and push us lower. Now, there are a few interesting theories on why this is happening. I've listed a couple that I like here, so you can pause this and read it, but essentially the rack space that the Ethereum miners once held in these big warehouses and facilities are now being taken up by Bitcoin miners. They've found Bitcoin miners' ASICs and they've just shoved them into the breach, and they're mining Bitcoin. So we're seeing that upsurge in hash rate coming onto the network. Also, production delays from 2021. So big miners, company miners that have ordered ASIC miners back in 2021, there was a chip shortage. So slowly but surely, those ASIC miners are now coming to them and they're plugging them in. So that is now being factored in, they're coming online.